Ever wondered why withdrawing your own money from the bank has become something of a Herculean task? Well, welcome to the new normal in banking. Let's delve into the evolution of cash withdrawals and the challenges that have cropped up in recent years. Once upon a time, banks were the custodians of your money, and withdrawing cash was a straightforward affair. You walked in, filled out a withdrawal slip, and walked out with your cash. No questions asked. But times have changed. Take the case of a Royal Bank of Canada customer who tried to withdraw cash for a car payment, only to be met with resistance from the bank. The teller would not hand over the cash without an invoice or proof of purchase, recommending a bank draft instead. And this isn't an isolated incident. Customers worldwide are facing similar hurdles as banks set withdrawal limits and ask probing questions about routine transactions. So what's driving this change? For starters, banks are holding less cash than ever before. The percentage of total deposits kept on hand for immediate withdrawal has dropped from 4% to possibly as low as 1%. This means that even if a bank holds substantial deposits, the actual cash available at any given time is minimal. The pandemic has also played a part in this shift, accelerating the move towards digital transactions. But with this comes an increased risk of cyber attacks, which the International Monetary Fund warns could trigger widespread financial instability. Indeed, the march towards a cashless society is well underway. In the United States, businesses and even national parks are going cashless. And in Australia, there's an active push to become functionally cashless by 2030. But this journey isn't without roadblocks. Payment outages, like those recently seen in the UK, highlight the risks of relying solely on digital transactions. Consumers, too, are sharing their frustrations. One customer had their account threatened with closure after requesting a withdrawal slightly over the bank's unstated limit. Another saw their credit limit reduced following a large withdrawal. In light of these challenges, some are advocating for the continued acceptance of cash. They argue that personal freedoms should not be compromised and that individuals should be able to manage their money as they wish. As we navigate these complex issues, the debate continues: the security and convenience of digital transactions, or the autonomy and accessibility of cash? It's a question that's worth considering in your own banking practices.